Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Chelsea Oliver. Welcome to today's morning call. We have red arrows across the world today due to Chinese exports being the weakest they've been since 2009. Scott, is this creating pressure for our market today?
They are actually acting as a headwind, and anytime you hear a headline like the weakest since 2009, it brings up all those fears of what happened in that 2007, 2008 area. But I don't think things are falling apart. If you look at the markets across Asia, you had the Shanghai flat, you had the HK down only 0.7%, and the Nikkei wasn't even down 1%, so not falling out of bed. And if you look at the chart here real quickly of the FXI, markets are still acting okay off the lows. So I would say, for things to, really pressure us, you would see that the FXI would break below this 32 area. So right now we're still above it. Or really, it even has room down to here. Look at the size of the move from 28 to the 33s. Okay, so if you want to look a little closer at it, it's right there. And then if you go to Germany and the DAX, that's down like about 1.5%. This too is still above, the 8-day moving average, which is right here. So I'd say as long as the EWG stays above this zone, it's going to be hard for the bears to growl too loud. And ultimately, I think a lot of traders are kind of looking for some type of pullback. So some overnight weakness is actually welcomed.
Our S&P futures are down 10 handles, well off the overnight lows. What levels do you think are important today?
I was thinking to myself, as long as the market holds above 1990, momentum will stay intact. So this morning when the futures were off 16, I'm like, wow, we're below that 1990 area, and then by the time we get into the office, we're back above it. So the forces of will are still trying to keep this rally intact. I would think most would like to see some type of controlled correction, which we haven't yet. And if you look here at the S&P, SPX here, you'll see it's been very methodical. You had your double bottom right here. Then it went up to resistance, and kind of got a little choppy, but overall, right here is when you saw the commitment to this rally off the lows, that red dog reversal. 3 days up, held the 8-day, and now look at us. So I would say you could almost draw yourself an ascending channel like this. And at this point, usually ascending channels are made to be broken to the downside, but until we get a break and a close below this 1986 to 1989 area, it's really tough to get too bearish. So if we stay above this and actually go green today, I think the next level that's going to come into play is this 2009 area with the 200-day right above. So this is a very, very tricky zone as the oscillators are like plus 90, so it's making it hard to buy. But at this point, things aren't falling apart. If we do get this close below this, your next spot here comes a little bit closer to about 1977.
Oil had another strong day yesterday. They hit the $38 to $42 zone. Do you think this can be sustained?
This is a spot that I would think you'd be a better seller than buyer. Oil was below 30, I think around 26. Dennis Gartman was on TV today saying he doesn't think he can get much through 38. Obviously between crude and Brent, that's why it's the bigger zone. If you look here real quickly at the USO, you'll see that it's been trending higher, and even this morning it's only down small. So the question is, what's the next level it can get to? Well, here's one spot where the USO broke down from, but really the moving averages don't start coming into play until here, and the 200 days all the way at 13 and a quarter. If we rally up to the 200 day, it's going to knock the teeth out of a lot of shorts. But as of right now, it's above the 8-day, expanding, and if that continues, you'll probably see the same type of constructive action in the XLE. If you remember, earlier last week we talked about this tight range here in the XLE. Here was a nice little wedge on top of this lower pivot. It cleared this 58.20 and went as high as 62.39. But it is extended from the 8-day, but also below the 200 days. So, I think my mantra is that it's, hard to buy and hard to short. So you want to tread lightly, and we'll see if maybe, the XLE could take a rest. And in order for this to stay constructive, you'll probably want to see, the 60-64 hold. But ultimately, the oil names are acting better.
And I know yesterday we talked about the high beta tech being, pretty weak, and they got hit again fast last night. So what do you think, we have a bounce here, or what are your thoughts?
I think it's going to help dictate the trade, and that was one of the problems yesterday was, you had the indices strong. You had divergences everywhere, and then traders were like, "Oh my goodness, look at high beta tech falling apart." So they really just got hit. And when we talked about the ascending channels in a lot of these names, and they all broke Friday's low and went pretty well below it. You want to start here with Amazon. Amazon. We've talked about this ascending channel here off the lows. Well, this pretty much broke to the downside. So if you want to draw this, you'll see that yesterday, if you noted the weakness that we spoke about that Chelsea uncovered yesterday, you could have been out of this once it broke below this 571 spot. So now the question is, does it hold here? So I would say write down 555 for Amazon. If we trade below this and it starts to fall apart, I think the market's going to get weaker. It's going to be hard to ignore. If we hold this, not the biggest deal. Google, we've talked about how sluggish that's been. Google, had its false breakout up here, after earnings, which was closer to 800, and then you had the same type of ascending channel that resolved to the downside. Last week, the market was up the last 3 days of the week, and this down, so that's showing you relative weakness. So at this point, I guess we'll see if it holds this spot. This spot here on Google is 705. Just like Amazon, if this spot were to give way today, I would think that the market's going to have a hard time holding up. But if we hold this and go green, you know what? Basically, the action might be muted like we've seen recently. And lastly, let's just talk about Netflix, because Netflix, look at the size of this wide range red bar. That's pretty ugly. And it still hasn't really broken this ascending channel. So on the 3 or 4 FANG type names, they're all showing some signs of weakness here. And now I would say this is pretty important for Netflix. If it gets below and stays below this 95.25, chances are that is going to be hard to ignore.
While tech was weaker, our small caps continue to show relative strength. Are they a better buy or sell here?
I tried to be short the small caps yesterday, and I made a little bit and I lost a little bit, and I couldn't believe it. They were up again. Right. So sometimes, when it's not calculated, you just stay away. We did show a really tight pattern in the Russell, when it was actually calculated to potentially buy, and that was right around here. Okay, this is when the range was tight. This is the time you get excited, okay, for a move. And then what has it done since? It's followed the 8-day all the way up, and now it's into another level of resistance right around here. But everyone's like, maybe it fills the gap and sees the 200-day. At this point, I think playing this to the long side is very tricky, but if you start shorting it too early and you can't handle that, that's tough too. So at this point, it's extended from the moving averages. If you bought it here and you've been trailing it and you're still sitting there, congratulations. I would sell some, I guess, short term, see if it stays above yesterday's low of 107.21. And if it stays above this for a little bit, I guess, like the overall market, maybe it has one more overthrow move. But I think being involved for that last push, is not very safe, in my opinion.
Metals continue to hang around. Do you think gold will make the high of the year?
I think it could make new highs in the year. I know out of all the commodities, it's held in best. If you would have said, Chelsea, to me, you know what, after the big move in gold and then S&P up 200 handles, that it would still be near highs, I would have been like, no way. So right there, it's given some clues that there's an appetite for gold still. You look here at the GLD, and you will see that it had a really big move. This is when it took back the 8 and 21 day. We say, how could sectors come back into play? Well, here's when it took back the 8 and 21 day. You had some power. Then you had a gap here that held, so this was protective. Okay, and then here was your exhaustion gap. And then it wound up holding the 8-day all the way up. So now short term, this is your last pivot high. So here you go. This is your inside range if you're tactical. It'd be nice to see a few more days to let the 8-day catch up, but that might not happen. So we'll see right now if the GLDs could hold 120.41 for another session or so. Perhaps you will get another move above the present high. It might look like a big move recently, but then when you go back to the weekly chart, you'll see that gold has really just created a flag and is starting to reclaim the 200-day. And at some point, some people are thinking it takes back this zone that got broken well back in 2013, which could take it all the way up to here. I don't know if I'm in that camp, but you can't rule out a move to at least this spot, which would be a little bit more upside there.
Any more closing thoughts for us today?
Well, I think yesterday a lot of traders were scratching their head, seeing the high beta tech weakness, so they were shorting the spiders or shorting the Russell. Everything's kind of trading on their own right now. So, if you see something weak, showing relative weakness, trade that to the downside. If you see something strong, trading relative strength, and you're a little worried about being in it because of weakness elsewhere, just do a little less. Two more names that I want to go over real quickly is Apple. Apple has given you a little bit of a bounce off of the 200-day. Some people who've been talking about the head and shoulders top pattern on the macro. This is the neckline. It still does have some more room. Today, I would see if maybe there's a bounce. If you remember last week, I talked about if we can get above 98-ish, that there could be a decent trade. And this is right here. Boom. That's when it broke above. So I would say in order for Apple to keep some short-term commitment, it should hold the 8-day, which is closer to 100. Lastly, Facebook was my focus yesterday for some downside, and just like I showed you in the other high beta tech areas, this ascending channel got broken to the downside, so let's see how it handles this spot. This spot here, the low is 104.72 from yesterday, so I would say if this holds today, chances are we might not fall apart, weakness could be more controlled. If we do break and close below this and it starts to deteriorate, then maybe more weakness sets in. So, in closing, Chelsea, I would say, I'm taking it lightly because, if the 200 handles to the upside, it's hard to be long, but if you start shorting too early and you can't handle it, you could get, squeezed and it could steal your lunch.
Yeah. Well, good luck to you today and good luck everyone. Have a great trading day and we'll see you tomorrow.